Alright, welcome to the weekend. Figured I'd do a quick video on the uh, broader S&P 500 real quick. Just my thoughts after the last week. Here on the 1 year you can see I've already placed all the fibs on it. We can see here the 161.8 that we talked about last time, and another one 161.8 here. If you missed that real quick, you can see the measured move on the 20 year from the high here in 2000s down into 03, projects a 161.8 here in the 2054 area or the 2035 area, and then the next one from 2007 to 2009 projects it a little bit higher here at the 2140 area. As we know, the 161.8s are significant levels. It's a golden fib, so you don't take those too lightly. You can see right now what we've done for the most part here is we have begun to make a inverse head and shoulders basically. Here in between the 161.8s, that's the channel. We break out of the channel, we lose this 161.8 and also the 61.8 there on the shorter term, and then we proceed to fall. We've now created a double bottom and also a complex head here. And now we've broke back up over that 161.8 and back into this channel. The channel is trending down for the most part. We can see it there. If we want to redraw this as a channel, just to get an idea, we could really put it here if we wanted to. Let's just put it here for the bottoms. And let me take out these. Alright, so you can see the establishment of the channel, the shoulders here, and then the neckline downtrending. I would really expect for this, or it would give it greater strength, if it could at least touch both sides of the channel twice before it breaks out. Typically you want to see 3 tests of one side and 2 tests of the other. You can see that's what happened here. It opens 1, top 1, bottom 2, and then top's got the 3 up here as well, and then it falls through. We know that this is resistance and support. We can see it happen here in the head, and then we can see we reestablish here, and now we're supporting that 161.8 and that 61.8 again. We've also bounced the yellow 38.2 from this low here on 9/29 up into the high on November the 3rd. We bounced the 38.2, and then we've crossed already up and through the 23.6, and we also crossed through the 76.4 here at 2071.54. If we want to, we can draw a Fibonacci retracement on this move, the shortest term, from that 11.3 high down into the 11.16 lows. And we can see that we've also crossed over the shortest term 61.8 here at 2079.39. And we've rejected the shortest term 76.4 here at 2039.57. What's really important to remember here is that we want to spend time and we want to kind of stall over these important numbers. The 61.8 is 2079.39. And that's really what we did on Thursday. We really built a decent base all day over the 61.8 value in here at the 2079 and change. You can see that on Friday we had that really big spike in the morning, and we kind of just petered off of it there towards the end of the day, which really isn't that atypical of the market on a Friday. We can see from the low of the base there on Thursday to the highs there on Friday that the bounce we saw towards the end of the day came in at the 61.8 fib there at about 2085-75 range, right? Also with the top of that volume that we did base. If we wanted to check the volume build out, we can run over to the ES, and on the 20-day you can again see the build out of volume there that we did complete all day Thursday. Quite a big spike here, HVN sitting at 2080. If we move out to the 180-day, you can see here on the 180-day that we've really started to build out just an area of volume, and now we're accepting into it. We're not rejecting it. We did reject the high volume node here on the 180-day in the 2095 area or so. but we are still contained within the volume, and we are still accepting in the volume. We're not being pushed out of volume, which means people are accepting the price right now where it is. Really anywhere from this 2043 up into 2121 on ES. As long as we sit in volume, it's got more of a bullish tone than a bearish. If we want to go back out, let's check the 3-year. Oh, that's the 1 year. Nice try. We can check the 3-year here. And what we see here on the 3-year developing is we see volume building higher and higher. So what these spikes reflect, they get further and further out, is more and more demand at a higher price for the market. You can see that here. Each spike, if they were built out the other way, if they were built out like this with the volume cascading lower, what you would get is more flushing through the market. You wouldn't have nearly the volume to sustain. So right now what you have, if you have a whole bunch of shares being traded at this price and we lose that value and we drop through this null, you have this area now that supports us, and you can see that reflected here. From the last time we dropped out of this, we dropped down into the 2000 range and we caught this null, this node right here. Prior to that, we dropped out and we fell all the way down into this third node. We fell through 2 nulls, and then we bounced out of it. We ran back through the null. We reestablished into this range of volume, and then we even pushed higher through the node again, or the null, and now we're back into the higher structured range of volume. Why is it important for the volume to build out up here into this range? Well, like we said earlier on the SPX, we're running into the 161.8. Typically the 161.8 is a golden fib, acts as a major resistance or a major support. So with seeing the establishment of volume up into this range at the 161.8s, we know that the demand hasn't diminished from that original formation that we see from the 100 and the 0 down that was built out there in that 2000 to 2008 year. So what this says is, with the development of volume within this range on the ES, basically, if we do see a breakout of this 161.8, sorry, at 2134.72, we should see a push higher. We should see a big push higher. Sorry, dry here. We should see a big push higher out of this area. And then that does bring into question, where are the targets higher? And you're looking at things like these 161.8s here. This last pullback sits here at 21.76 or so. That's a great first target. You have the 200 here. You can see in this bigger, deeper pullback that we had earlier in the year in this cyan blue color, the 161.8's up here at 2300. And there's also multiple longer term fibs up here in the same range, as well as our inverse head and shoulder target up here at 2320. So you have a general cluster of Fibonacci retracements just right here in range. They give you a great target on this breakout. If you're looking at a shorter term play, you could use the other Fibonacci levels above the 1 to give you this kind of look. You see that so 2176, 2213, 2236, and then up here into 2270. All great places to look higher if we do break out of this pattern. The question is, when do we break out of this pattern? What I'm looking for currently is for this price range to hold, the 2037 to 2058 area, just in between these fibs. It is typical to break through a fib and then back test it. So what I really want to see, where a great buy point would be, is if we could come back and back test this 2058 to 2060 area for a buy, and then really could be a buy all the way down into that back test of that blue 61.8 again down here at 2032. This whole range right here would be, in my opinion, a great buy for the possibility of a bounce to at least test up into the neckline again. If we do see that, if we see a test lower, that would count as for me, it would count as the third test lower against this shoulder line, which I like to see for a push higher and possibly even to break this, and then run up into the 2140 range. That's getting a little ahead of ourselves. If we do see a push early in the week and we do test up into the top of the neckline first, and then we come back, I think that'd be even better. It would give us the second test up here into the shoulder or the neckline on the right shoulder, or on the right side of the shoulder, and then if we pull back into this 2130 to 2160 range, you get your buys in here for a test to turn up and push back into the 2116 and then the 2140. If we do break below this price, we'll want to watch the bottom of the channel, and once the bottom of the channel breaks, we'll be looking for a move down here into the 2000s again. If this is the top of the run and we do break lower, we could simply just take a Fibonacci and do something like that. And we see that the 161.8 sits down there at 2171, which is also down here in this cluster of fibs as well in the 1970s. So those are certainly the areas of support lower I would be watching as well.